Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening, and we're here now on Tuesday, and we're at the 7th of March, 2023, 6:10 p.m. Sorry about that. Well, yesterday I had a big nightmare. That's why you didn't see me. Electric issues outside of my house, and today it happened again. So certain things were happening. We had to have electricians here. The city had to do things, and got it all done. Everything is fixed. The heck with it. All right. But what an electrifying day it was. How do you like that pun? As you saw what Fed Chair Powell said, he said the obvious. They're data dependent. This is what he said. He said that if the data keeps coming out strong, the Fed's going to have to get more aggressive. They'll have to raise rates further, maybe faster. Those are the terms that he used, and probably stay with them at a terminal rate higher than normal. Of course, Senator Warren attacked him. 2 million people or more are going to lose jobs. And okay, that's how it's going to be. But if you can't beat the inflation genie, 2 million's nothing. You could be looking at a very serious situation, because once that genie's out of the bottle, as you can already see, this is it. You know, this didn't just come about, what's going on. The Fed didn't cause this. What really caused this was the U.S. Treasury, and throwing all that helicopter money during COVID at things. In your local paper, how many people do you see each week are being arrested for cheating as they got the COVID money? I mean, you know, the ones that make the news are $500,000, $300,000, $1 million they did illegal, blah, blah, blah. You do know that they don't even bother in the news with the $1,000, the $5,000 guy. Who's going after them? It's too expensive. You don't think that was going on? I know it was going on. I can tell you, I'd hear stories of people saying, go create a corporation, file with the government, you're going to get $10,000 like nothing. And there's truth to it. And those people, if you did it small enough, they're probably under the radar. It's the big ones that they're going after, and they'll get them. Okay, they won't get them all, but they'll get them. All right. So what do we do now? Well, the hardest thing to do is put your hands in your pocket and say, I think I want to stand back. I came into the day today for my subscribers with 2 great positions that by day's end, I said, it's time to cover. That's all. You know, you have tomorrow the Bank of Canada. They're going to have their interest rates. You had today the Reserve Bank of Australia. Tomorrow, you're going to get the ADP. I think the Jolts report comes out too. And then on Friday, the jobs report. And on Tuesday, the CPI. That doesn't mean you keep your hands in your pocket through all of it. But you also have Fed Chair Powell talking at 9 in the morning again. I think it's too much to try to second guess. And too much because the market's going to swing, as you saw today, in 50 different directions on you. But if the dollar keeps getting stronger, it takes commodity markets as a whole down. Things priced in dollars lose their bid because they get more expensive. Does that make sense? You saw it happen today in oil. You saw it happen in gold, silver, copper. I can go on and on. Platinum, palladium. Things priced in dollars got hit. Even the grain markets got hit on that news. All right. So when we look at where we're at in the bigger picture, the 18-week moving average of closes is 39.98.5. You're at 39.88. You're going to tell me that you're going to try to second guess what it's going to do right here? Down 62 points for the week at this point, but you're basically at the 18-week average. I want to see what it does. Now, if you get a definitive close under that, then until you get over the high right through here, and we can come back on this, and that would be right here, which would be 49.75, the bears would take control. But that's at the end of the week. You're not at the end of the week. You're going into Wednesday. You're going into midweek. When you take a look at the action here, I recently made a statement that I think we have a trade top and a trade bottom. We have a trade top and a trade bottom, all right? We have a pattern of a lower low and a higher high. That is not a trend. The market is possibly going to retest now the 200-week average and the 100-week average. We'll see if they can get through it or not. Last time it came there, it probed it and it got thrown back to the upside. Could be that case one more time. You know, traders love Analysts love the 200-day moving average on first challenges. They think that it's the place the traders are going to take a look. And the reason is it's a one-year average, if you think about it. It's almost 1 year of days. That's important, business days. When you take a look at the micro mini S&P in terms of Bollinger Bands, you're far away. It can get there. You know, tomorrow's action could be anything with all these reports. That would be 39.10. That would look real bad on the chart. Not an area where I would tell you to go short, but that'd be a lot of damage on the chart. And momentum-wise, you have a market that is now at 29.64. Any reading under 30, in my parlance, is oversold. So I have a market void of a trend, had a bear market rally. That's the way that I think you do it. And if you'll remember, as we were rallying last week, I said, I know traders are going to find this hard to believe, but technicians will still say this is a bear market rally. Now you look back and you go, oh yeah, that was a bear market rally because it rallied up to the 18-day average of closes and sort of failed against it, couldn't continue. Okay, whatever. The NASDAQ, lower low, higher high, 200-day average in gray is 12,043. You're 100 points away from it. That's nothing on a day like tomorrow. Which way? It doesn't have a trend. Unlike the S&P, it is not oversold. So it's waiting to see what's going to be next. In the Dow, I was looking to see what happened. You know, I had a bad week last week in these markets. I got very wrong. On the 3rd, I had to get out of right here on Friday in the Dow. And it was up 396. And now what did it do today? It's down 587. I mean, these are the swings you're getting. And all it did is rally. And I knew it. I told my clients, I said, it's just rallying into the 100-day and the 18, but it can keep going. I mean, at what point do you know it's going to end? You don't. I mean, the guy that does, I'm not him. But somebody must have thought that's it. In any case, you're not in trends. Got a lower low, higher high in the market. And in the Russell, if you take out this low, you're probably going to go down and finally challenge the lower Bollinger Band, the 100-day, and maybe even the 200-day average. But again, not a trend. You have higher highs, lower lows across the board there. In the bond market, you lost the embedded reading. Now, what's going on here is the short end has gone bonkers to the upside. You've got the two-year giving you over 5% return. The 210 is a 103-point difference. So you're over a full basis point difference. So this is saying at some point, I don't want to be saying we're just going to keep rallying 30 years out. That's not going to be the case. Okay. But when you get in and you get to the 10-year, a more pronounced bearish picture. Didn't lose the embedded reading. And the 5's another picture. For my money, I told my subscribers, why are we going into this? This is a big deal. Stand back. In the dollar index, you're up to the resistance, the Bollinger Band, 100-day average. Each time you've gotten there, you failed. And you've come right back down. Why should this be different? I know you're going to tell me it is different because of this. I'm going to repeat. The Fed chair said in plain English, data driven. If the data stays this strong, he told you what they will do. The word is if the data stays this strong. The sentence is that. We don't know. We don't have the data yet. Unfortunately, you wish that this had all happened, this meeting, a week from now, but it's not. It's right in front of getting all the data. So we'll see what happens. Are you trending? You're not. You have a lower low, higher high, and you're still caught in the Bollinger Band area. And the flip-flop will be the case in the euro. This was a bear market rally into it and then a complete failure, but you're oversold as can be. The British pound right back down to new lows in the market. Remember, they're talking there that they don't want to keep following the U.S. on the interest rate cuts. That'll make them weaker, in trouble, and it exasperates a lot of their problems because anything they're paying with dollars, they got a weaker currency to do it. In Bitcoin, you're still in a bearish trend here. Lower highs, lower lows, but very oversold. Will you come down there? I don't know. That's going to be the question. Look at the differential, how they've taken in Brent versus WTI, and you could see how these energies, they just came unglued today. I mean, these are big breaks when you're looking at it. This market today was down 3.5%, almost 3.35, and the range was monstrous in $4. Big move in the marketplace. And now the question is, where does it go? Well, it didn't quite make it to the Bollinger Band. Will it make it to the lower one? If it gets underneath 82.36, it destroys the ability to say it's still got an uptrend in any way. The WTI actually held better, closer to the 18-day average, a huge down day there, but it has the pattern of higher lows and higher highs. I love that gasoline. Didn't I just tell you? I think you're going to get a chance to come in. Now, you're still overbought in the market with a reading at 72. That'll change. I want this market to hold in here, and then maybe if you decide to pick something up. Now, I don't know that April's the right month to own for the spring, summer. It's probably June and maybe even a month out from that. But I think traders are going to pick up on this. And if they get through this Fed story where the interest rates don't go bonkers, they'll start coming back into this market looking for that summer rally. If this labor is so strong that the Fed has to raise rates again, remember what I'm saying. You could throw all this a wacko. And as much as I think that you'll be okay in the summer, I think it gets pushed a little bit back because high interest rates will weigh on these markets. I don't want to stand in front of that bullet train and think I can guess quick enough. The market that's interesting right here is Nat Gas. You went to the Bollinger Band bottom, you stopped. You went to the Bollinger Band top, you stopped, and you've run back to the 18-day average in the middle of no man's land. So if you were to push me and say, Ira, what should we do tomorrow? The answer is you should become a subscriber with me to exactly what I do. The 2 videos in the morning are what you want to see. I will be able at 9 o'clock, we'll have all the data we need except for the Fed talk. But what can the Fed chair say different than he has to? He has nothing to clean up. Unlike so many times where we see Mr. Powell have to go in and clean things up, and I write about it and I talk about it, there was nothing here. He was absolutely crystal clear. He gets an A+. He gave the message. He did not say they have to keep going higher. Data dependent. If it comes together that it's that way, they got to possibly pick the pace up, find a higher terminal rate. But what he let you know is they're staying there, wherever they get to, until they believe that the trajectory is going to the 2%. I don't think they're coming out of dropping rates anytime soon. We cover all this, 40 charts. First at 5:30 in the morning, then again at 9 o'clock. All the major sectors of the market. Come on. Nothing. You're spending more on your coffee than you're doing this. You're going to end up between the two of them with about 48 videos. You heard me, 48 videos in a month. Each one about 15 minutes long. Really a lot of trade ideas. A lot of building, teaching, a lot of showing. Why the recommendation? You'll see winning ones, you'll see losing ones. What can I tell you? Nobody walks on water, but I'm here after all these years still doing it. There's a reason. IraEpstein.com, under the word research. You can always click up here. It'll take you right there as well. I want to see you in the morning. Take care.